The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. This is the, I always have to think about it, even though I write it down about a dozen times. This is the 14th of November, and my pleasure to be here Monday through Friday market days, and 11 o'clock till noon, 877-927-6648. And I mentioned to the den, hey, maybe this is a great time to do a great day to do the a lightning round, so we're going to do that a little later on. Let's look at the, and I had a couple of questions on stocks already in the den, so I will go through those. One of them I actually had as a buy this morning with a very tight stop. Within the moment that you actually put the buy in below yesterday's close, it got taken out. It was just, there was a particular chart pattern that looked as if it would work. It just didn't work, and that is we'll study and understand why. It was very interesting because it actually fulfilled a whole chunk of things yesterday. So we'll look at that. So in the meantime, back at the ranch, what we're looking at here is, don't forget those Tiger dollars. Those Tiger dollars, we're going until Sunday evening. Really important. You get those Tiger dollars, you save a chunk of money, and it's really worth it. And not only that, you will have the Tiger dollars there already with your 25% or 20% bonus. And what's most important, you can use them at any point. They do not have a due date. So that's really important. You've got all these services here. And not only that, you get, I think this is coming Tuesday, you get Tom's 4-hour, I think it is a 4-hour live webinar talking about all those ETFs and the structures, etc. Hey, that is just a great bargain. Let's go to the market. The Dow's up 40 points at 50,862. Yellen's giving her a little spiel right now. S&P is up 518 at 1787. You've got the comp index down 3. I mean, Cisco's a big part of that. Oh, Cisco. I mean, come on. Bad report. 39 to 61. The comp index. Gold is up $20 at 1288. Now, this is going to be very interesting. What is Yellen saying? What is the implication? Is there an implication? Is there a sustained move in the gold? We'll look at that in a moment. But in the meantime, let's go on to silver up 29 cents at 20.73. Platinum's up 11. Now, you've got high-grade copper down again at 315. I have to tell you that I must consider that the failure of copper is a component. I'm not saying it's the component. It is a component that I need to keep an eye on. In fact, I'm going to go to that right now. HG, I'm looking at the continuous contract. HG, there it is. Nah, not good. You remember I talked about that H pattern after a peak there. I even have to put in a down arrow. Copper's saying that something's going on internationally as well as domestically. And I think within that context, I have to keep copper on my radar. It hasn't broken down, but that monthly chart says copper, if you can't hold above the 9-period exponential moving average, you're just going to make a series of lower highs and lower lows. And I do consider that copper, even though we're in a modern age, a different kind of an age, it isn't that different. Copper is still very important. Now, why do I say that? Because there are other materials that people have begun to use. So maybe that is part of why there's less usage, or maybe it's China that is not using so much. Well, and bonds are up 25. Now, this is very interesting. Bonds are up. The dollar is up. Bonds are up 25, 30 seconds at 132.23. The dollar is up 0.07. The dollar should have been pulling back, especially with gold up $20. So we've got we have a situation. We have a situation. And it's going to resolve itself. Now, I'll tell you why I think it's going to resolve itself. Why? Chart patterns like human nature, we're just repeating the same things over and over and over again. And the big question for me here is, are we going to repeat the pattern? Let me get rid of this one. Oh, look at that. The diamonds went right to the resistance point. They've stopped at that resistance point. They go much higher. That's a very nice breakout. I don't want to look at that chart. I don't want to look at any other chart. Well, the VIX index is down again. It's up 7 cents at 12.59, but I mean it's down in the 12s. I must tell you the 12s in the area to watch very closely because that's where we have had some very nice moves to the upside. Now let me get rid of this because it's irrelevant because today we've gone to a higher high. This inside track channel with the resistance is so important. Why? Number one, this is bar 26. That is the 26th consecutive session in the Dow. In the chart pattern and the technicals here, 93% in the stochastic, MACD is starting to narrow, but hasn't turned negative yet. That narrowing is an issue, but hasn't turned down yet. Now look at this. The pattern that I've been following, which is a very, very close approximation, not exactly a template, but an approximation, of the move into the August 2nd high of 15,658. 300 points ago. And that took 28 sessions. Much of this is matched, except that the MACD and stochastic were much weaker on that rally to the new all-time high, to peak F. Therefore, I have to, and I say to subscribers today, I will have to consider, I'm not doing it yet, but I will have to consider that if this move here is very strong, certainly if we break that resistance, the resistance now is around about, final resistance is 15,883 because it's a rising trend line. A snap into the 15,900s, I have to consider there's a possible Chapman wave, a recount, a reassessment that this is F/B, and that we could still go C and D into next week to the upside. All the FX that were needed to pull back the market yesterday and close under the 9-period exponential moving average were there up until the bounce started. As the bounce started and as the S&P kept getting stronger than the Dow, 500 stocks leading up, said to myself, uh-oh, there's going to be a bit of a squeeze, maybe even into the close, and that's exactly what we saw. In fact, we saw some stocks and indexes get squeezed positively right into the close. Now, often what happens is it squeezes into the close. The next day you get a pullback. Well, we haven't had that. Well, we've got testimony here, and Yellen is saying monetary policy would be a blunt tool to address stability. Basically, what she's saying is the de facto situation is what I'm dealing with, and I'm not going to change anything until I, who have been here 30 years, 20 to 30 years, in this situation, having watched it in all its iterations, I am going to look for a lot more evidence before I pull the plug on anything that I think is not working or has outlived its usefulness. That's my assessment. Does that say that we are going to run now all the way into, usually I say the first week or two of November, if the market is strong, to my memory, I haven't done the study yet, but my memory is usually, I do this enough, the memory is kind of good. My memory is that the market has a chance to run all the way into the last day of the year to the upside. Because right now we've got all the ingredients of uncertainty, got all the stuff with Obamacare, let's call it the healthcare initiative, all the stuff going on, trying to stuff the genie back in the bottle when an insurance company says this insurance policy is no longer valid. They can't in a day or two reinstate it. It's gone. They have to do a whole thing. What if they have to give tests to all those people again? Health tests to say, well, that's how it was, but it's a new policy. We might reinstate it. There's a lot going on here, and that might be the trigger. So let's leave it. I've got the parameters here. A break above the, I just make it real simple. A break into the 15,900s. I have to consider this is not leg F but leg B, especially if there's just a sell signal needs technicals. A sell mode needs persistent negative economic news. It doesn't have to just be economic, but negative news that impacts, that affects and effects the market right on. It means you go from a weekly news thing that says, oh, this is not so good, market pulls back, then it recovers. Then it goes to almost 3 times a week. Then it goes to almost every day. Then it goes to almost every hour. And then you've concluded that particular move. Just like when we hit the October bottom, was that October the 8th? The October bottom at 14,790. It was just a plethora of bad news. And the technicals just strengthened that day. It started to strengthen. So let's just go on. So the questions I had in the den, and I'm going to talk about a whole bunch of things. I just still have that Investors Business Daily out here to look at the top 10 or so stocks. But let's just go. First question was, would I look at DSX? DSX is a shipper, like dry ships and Nat, I can never remember the name, Nordic, whatever it is. But now, DSX has had this, here we go. It has this pattern that says, if I rally to leg A or B and then fail and come back and break below the initial turnaround signal, that's a negative. If I hold that and then start a brand new move and I only go to A and then I pull back, I keep that A unless there's a little A underneath it, which there is. So now what I've got is A and B. If you're looking at the Tiger charts, let me show you what I'm looking at. DSX is trading at 11.94, down 8 cents right now. It had a terrific run from the low of the 24th of June, 938. It goes to peak A, the A minus, because it restarts, and then it goes A. Whoa, I didn't see that. That should have been a B and a C, and that's a D and an E. So this is unusual. Okay. And then it goes correct. Okay. And then it goes F and G. That's not a problem. So it goes all the way, and it actually goes in a series of higher highs before the technicals break down. It goes to a peak G. That's the highest level you can get in the names, because you have to restart after that. And it goes what? It goes to where? 1324. At 1324, it pulls back and it makes trough A, trough A, and then a little mini trough A, trough B, trough C within that. And that comes down to 1116 on the 9th of October. It rallies to a peak A and breaks a trend line resistance, goes to B at 1265, and then it pulls back. But it doesn't break. And let me type that in, 1116. That low of 1116 so far is very important. Then what it does is it rallies to peak A, fails, comes back, has another higher high. So you can see there's a trend line, support line right there that holds beautifully. There's another one here with resistance, so you're making an asymmetric triangle. We'll talk about it when we get back. Basil Chapman, Tiger finishes out. Dow's up 53, S&P 7, up 7.5. Be right back.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. Dow's at 56, S&P's 8.5, and what we're looking here is a DSX. This is Diana Shipping. Now, there's an asymmetric triangle here, meaning that the angle down and the angle up are they're not close together, but they are moving in opposite directions. And it isn't symmetric. It is slightly off with the lines down greater than the lines up, than the lows, the rising lows. Most importantly is, I don't know whether you are in it or not, Joe. Joe in the den asked me. What I would suggest is that for a very small stop, you have the chance that if it breaks and closes above 24.14-ish, only 30 cents above, that means that the candle of the 5th of November at 12.29, that becomes a target, the top part of that candle. So for a risk of 20 cents, 1177 is the 9-period exponential moving average. I say that is exactly on the line. I say that because if it takes out the low of today, 1185, I don't know if I want to give it that much more room. I just don't think, because it will probably break underneath that 1177. I might even say that for a risk of $11.80, so if you can go 17 cents, 5 cents underneath the low of today, because if it closes under the low of today, it says that magnet of the 9 EMAs it'll be calling. And the stochastic's only at 58%. The MACD has crossed positive, but the risk is 20 cents down, but about 50 to 80 cents on the upside if everything starts to kick in. So if you're in, I'd say I'd have a stop on some part of my position, and that's different. If you're in, I'd have a stop underneath the 1177, 1172 on a portion of this. If you're not in, my suggestion is to say, I'd nibble at it right here, and the stop would be, as I say, 15 to 20 cents, very, very modest, and I would only have a small position. I would only add to this position at any point if it closes above 12.29. That's the candle of last week in the weekly chart that says, close above that. Now all of a sudden I've got a cup formation saying I'm going to retest the high of $13.24. So your potential is quite a bit more than your potential loss. So that's the way I'm looking at it right now. And I'm only doing it in the very short term. Why? Because that weekly chart is the one that really needs to kick in. But it's the monthly chart that says to me, having made a peak C, it does take between 1 and 4 months before it starts to kick into the new high. I don't want to just be stuck here for a while. And I'm going to, you got December calls? Okay, if you've got December calls, that's a completely different kettle of fish, and I'll explain why. If in 2 weeks' time, it is at any point, if it breaks underneath 1141, that's the low of this week so far, I would say that those calls, you've got to be a little careful with those calls. And since they're December, you'll still have quite a bit of premium because it's going out and it's 50 cents, so you'll lose somewhat in that. My thinking here is, if you got the calls, I would start to look at it in much greater detail. If this thing hits $12.30 at any point in the next, I would love to say 3 to 5 days, but it's probably 4 to 7 sessions by end of next week. If it does that, that's really nice action. And I would tend to think that you could even increase a little bit the call position, as I say. If it goes over 12.20, 23, and then pulls back just a little bit and it holds at a high level, that's very positive. I'd be a little cautious, as I say, depending on how many calls and where you got them. Definitely a break of 11.20 says to me, be very careful, because this thing really could be stuck for another month or so. That was it. Then the next one was the stock that we had this morning. That's the reason why I absolutely insist that as you put in the buy signal, sometimes as we put the buy signal, the sell signal in, the very bar takes us out. You know what? It happens within minutes sometimes. I'd rather just know it's clean, it's out, done. 60 cents on how much is it on a $43 stock? It's just not a big deal. One and a tiny bit percentage loss. The reason I wanted it is that, look at the bar right there. AVGO, Avago Technologies, made it a leg D in the monthly chart. I've still got this as, I can't count it any other way. I guess I can. I could count that as a D. But everything about this says that this is probably peak C that was made in the weekly chart. The MACD's turning down, but still good. Stochastic's now at 79%. And I'll talk about this, and I'll tell you exactly why I did it. And the pattern I was looking for, a pattern that's worked for us a lot lately, it didn't work right now. And I'll talk about it. You need to be able to talk about your losses and why, because you don't want to repeat them, and you need to talk about the gains and why. I'll be right back with Dow's up 30.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. It's that time of year again, and our semi-annual Tiger Dollar sale is back. For a limited time only, you can get a 25% bonus on any Tiger Dollar purchase, and included in your purchase, you'll gain access to an exclusive 4-hour live trading event with Tom O'Brien on November 19th called Strategies for Trading ETFs, a live trading event. The only way to gain access to this exclusive 4-hour workshop with Tom O'Brien, which includes live trading, is by purchasing Tiger Dollars as part of this promotion. Tiger Dollars can be used for any TFNN products and never expire, so now is a perfect time to get your 25% bonus. Don't delay, this will be our last Tiger Dollar promotion in 2013, so act today. For all the details and to get your 25% bonus on your Tiger Dollar purchase today while gaining access to Tom O'Brien's exclusive 4-hour online workshop and live trading session specifically on ETFs, visit the front page of TFNN.com today.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. I'm trying to check out any news here on this particular stock. I don't know. It wasn't earnings news or anything like that. So we've got a stock that is down 2.16 at 43.21. And the question was in the den, I'm in AVGO at 43.24. Where should I put my stop? And I said, I would. The trend line support is at 42.59. I wouldn't even hang around there. Just a penny under 43 at 42.99. I'd be out. I probably should have looked at that bar, these down bars, these red down bars, a little closer. But there was a pattern that I look at, which is like a flag pattern, and it went above it. I said yesterday I liked it, and probably if we bought it yesterday at around it opened at 44.35, and it closed the day before at 45.13. 45.13 close, opens at 44.35. I didn't realize it gapped down like that. Yeah, because of the market, it gapped down. So if we had bought it there, I would have been able to raise the stop. We would have got out today for at least a break even. Set as a 40 cents. Sorry, it was. I think it was a 60-cent loss on a 40. Well, at the time it was a 40. I'm sorry about that. It was a $45 stock. So what I'm looking at is that the pattern should have accelerated to the upside, especially if that was peak C. The previous day it was right in that pattern there, holding the 9-period moving average. It just needed to break above 45.85, and that would have said you're going to leg D. So that was a mistake. Did it incorrectly. This news here is news. This move is news related. There's no reason why the stock should have gapped down like it. It hasn't gapped down like this. And as I say, thank goodness for stops, because without those stops, you can get, the way I look at it, Cisco, I think, assisted with a hit on Avejo. It looks to me like there's a relationship there, that's for sure. There must be a correlation. I didn't realize that there was a correlation. And the way I looked at it before is that it was the way I looked at it is that it was in an area that seemed to me to be improving, and that area that was improving obviously just got hammered. And I didn't quite understand why, because it was semiconductor devices. And the way I was looking at it, I thought the focus was on motion detection, and I think that that's a huge area. So there was both a fundamental reason and a technical reason, and I was wrong. And as I say, now I'm looking at it. I don't usually pick stocks like this with a very consistent pattern of strong red down days. And that I was just looking at the highs and the lows. And now it's something that I'm going to have to take into consideration. Has it got a pattern of breaking to the downside consistently? And the answer was yes. So I was wrong. Wrong analysis, wrong entry point. And thank goodness, as I say, if you kept your stop, it was just one of those things. 1.5% should not be a big deal in your portfolio, especially since it was what I call a small entry point. Now let's go to our first caller. We've got Ariana Acadia. Hi, Ari. How are you?
Good morning, Basil. I'm doing very well.
Good.
I'm thinking of getting into IYR on the 120-minute chart.
Okay. Now, it's interesting you mentioned this. I've spent a little time on the IYR. I didn't get to the 120-minute chart. In fact, I didn't even update the regular chart because it was a pattern that said to me the consistency of the arch formation is such that I have to respect that it's just having a very difficult time in this market environment. So I looked at it, and then I said, oh, you know what, just let it be. Let's see how it handles the coming week. And that was actually about 5 days ago. Now the question is this little rebound a little rebound that's going to fail, or is this a rebound that has legs in the sense that I don't want to look at it IYR, which of course when we look at the IYR, the iShares Dow Jones US REITs index, it is the commercial side of REITs, made a peak D top in the monthly chart at 76.21, pulled back, and really has made a very nice sideways consolidation. I shouldn't say very nice. It's just a sideways consolidation. It's not that nice if you look at the technicals in the monthly. The weekly chart also has got this H pattern that's making me a little nervous because this is an area, a dividend area, and I'm going to put this into the category of Johnson & Johnson, which has made in all respects in the daily some kind of a top at 94.64, which would fit into the dividend type stocks that were favored at a certain point and then went out of favor and then came back. Now, Peaky in the den says IYR trades like a big bond, Basil. Yeah, in the sense that we're looking at some kind of rate correlation.
That's the way I'm playing it, like a bond.
Right. So now, if I look at Johnson & Johnson in the cup formation, it's made an F, which could be an A, but everything about it says to me I must call it an F. And now the reason why I bring this up is because in my mind's eye, I have this picture. I haven't yet been. Everything is so complex that the picture itself, I haven't been able to make it. I'm just beginning to see the light. Let's put it that way. And what I'm saying is, so the bonds haven't yet rallied. They're up 95%. The TLT is up 95 cents today. Let's just for a moment exclude what Yellen is saying. Let's just look at what the market is saying. And the market is saying, I'm going to go to another chart. I want to get dividends out the way so that we're talking apples to apples, and then we can talk oranges to apples. And when I'm looking at the yield chart, there's a V-shaped pattern that's occurred in the 30-year, not so much the 10 and very not so much the 5-year notes, but the 10-year T-bond fund yield has got a 39.30 peak D. The rally that we saw just recently, and I'm going to draw this in right there, and then I will make this bigger so that people can actually see if you're looking at Tiger TV. And I want to spend a little time on this because I think you and I are looking at what would be at the current market conditions with a potential of a 3 to possibly even a 6-week move, even into year end. If there is a rally in one of the rotational sectors, would that involve something like the IYR, which is the yield that you would get from the commercial properties? Would it be something like the TBT as the TLT as the TBT pulls back? Is it what's happening to the Procter & Gamble's, the Clorox's, the usual defensive stocks which we put together with yields? So I'm going to do this. If the yield breaks above 39.30, the 30-year yield, that could be an E, which is a pattern that we used to see back in 2009, 2010. We had all those peak E's that then failed and went to a much deeper decline, which would say that the TLT is going to have a way bigger rally if that was to occur. First of all, a short-term pullback, TBT rallies, maybe the IYR. So you see what I'm doing? I'm just throwing that out as an historical perspective. And the reason why I do that is that I'm not sure that the 10-year and the 5-year are going to make it back to the peak E and peak C, peak C at least, previous tops in the weekly chart. Got that out the way. Now let's go to the IYR. So the IYR is sitting at 64.77. It made an alternate count peak F top when it ran to 68.25 on the 25th of October. Now it pulls back. It holds above the 62.99 high low of the October the 9th, ran with the market from the October 8th, 9th low. Then it pulled back very sharply. The general market has gone on to higher highs. Now, my big problem is the decline from peak C. And you know what I'm talking about. It opens at 67, round number high on the 25th of October that week, and it goes to 68.25, and then 66.46 is the low. Closes at the 68.18 level at the high, and then the next week it starts coming down, comes down real sharply. So I know that you do not mind.
It did manage to make a higher low, though.
Yes, I was about to get to that because I was about to go to the daily. The daily has consistently made higher lows, and so far we can even say higher highs. So there's a trend line up that is quite important. I know that you are quite prepared to start positions and add to positions or take them off according to what's happening in both your technical analysis and within the Chapman wave. So I'm going to make this recommend. You've already started a position, correct?
Yeah, no, I'm going to take it now on the B retracement. Well, I may have missed talking to you, but on the B retracement, I'm going to take it in 120 minutes. I didn't miss it.
Okay. Oh, I see what you mean. Yeah, because that. Okay, so you know what? Missing it by 15 cents, 10 cents is not a big deal. This is what I'm going to recommend. And I don't know if you need to even rush into it, but I would, because you like to step into it, I would start the position here, but at 64.84, a break below, I don't have to tell you this, but not a break, but a close below 63.13 is only a 1.5 away. What's not even 3% on a small position. It's not a big deal. If it's a startup position that you are looking to go to at least the 65.17 50 period moving average, and then maybe the 66.20, which is the 200 period moving average, I would just start the position here And within 3 days, you're going to know if this thing doesn't take out 64 on the downside, but instead goes to 60, 65, 25, I think you've got yourself something that's going to work in current conditions. It's got a lot of work to do in the weekly chart, not to get back to the 68.25 level. It will be 68.26 to make leg D, but to even get to the 60, the low of the week of the 1st of November, the 65.86, which is just a point higher, and it's already up 71 cents. If it's going to work, it's going to work pretty close to, by Friday afternoon at 4 o'clock, the IYR, if it's going to work, has to be in the 65.80 to maybe 66.20 area. Wow, if it does that, I think you've picked up a really nice observation of something that could work in this particular environment as a sector rotation. But my thinking right now is that if it broke to under 64, but especially if it broke under 63, I'd say, that cup formation, you know what I'm saying? That, and the monthly chart is not good. So you are looking for a counter-trend rally that has its own legs independent of the weekly and the monthly, and then it starts to help the weekly and the monthly because they are not looking that good. So I hope that helps you. And the reason...
Basil, is if I make a D wave in 120, then I'll see what it looks like on the daily.
Exactly, step by step. And you know what's going on? You've covered the gap down in the 120-minute chart. 65.28 is the 200-period exponential moving average, and it's acting very well. And as you say, you missed by about 15 cents that actual dip to the low side. But that's so. I think you've got your eye on a potential really good bounce sector.
I appreciate it.
Thank you for calling. Good to hear from you.
Thank you so much, Basil.
Thank you. Ari in Arcadia, Florida, and we're going to go to Bob in Rumson, New Jersey. Hi, Bob. How are you?
I'm great. How are you, Basil?
Very well, thank you.
I love your show.
Thank you so much.
IWM, I've been trading in and out of this security for a couple of months.
Right.
And I see its lag in the market today, but the day's not over. Anything can happen. I'd consider re-entering a short position at some point, and I wanted your opinion on it.
Folks, we're looking at a really interesting chart. This is one of those charts that if you're looking at, depends on the time frame, and that's why I make such a big deal about time frames. The monthly chart of the iShares Russell 2000 ETF just looks fabulous. When I say fabulous, what I'm saying is it looks like one of those charts like Apple on the way up. It looks beautiful. It has a high of 111.62 back in October. It opened at 100. The low was around number 103. So just keep this in mind. At any point in the next 3 to 5 weeks, if it takes out 103, that 101 area in the 9-period moving average of the monthly, it'll be the first time it's getting even close to trying to tackle that 9-period exponential moving average. And I have one indicator that says it hasn't yet given me any signs in the monthly chart of even a short-term turnaround, but I'm going to be watching the on-balance volume very closely. We're going to take a look at the weekly, which is giving me a signal that says we're getting close to some kind of reversal. Then we're going to look at the cup formation in the IWM daily chart. We'll be right back with Bob in Rumson, New Jersey. Basil Chapman, Dow's up 29.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. We're back now. The Dow's up 27, S&P's up 6. I want to just say the IWM is down 23 at 110.29. That's the Russell iShares ETF. Now, we're on with Bob and Rumson. Now, I like to think that chart patterns repeat over and over. It's either the cup formation, or the arch formation, that's the inversion. It is the V or the inverted V, and it is a straight line move. A straight line move like if I'm looking at the 120-minute chart going straight from the low of the 9th of October, where Larry gave a fantastic call, a bullish call, at the low of 103.00. It just went straight up. Yes, it made peaks, but it was basically a straight up move. Then it made a little V-shaped recovery, and then it went all the way to D, and that made a large arch. And now that arch is possibly making a cup formation, but I've got peak D coming right now in the IWM if there is no high above 110.60. That's number one. Number two is, I was talking about chart formations, and the monthly is still beautiful. The weekly has walked the 9 EMA, but it does keep testing it. It hasn't closed underneath it since the week of the 30th of August, but it has dipped below almost every 3-4 weeks. Now the action is, it made a slightly higher high than last week. It hasn't closed because we have to wait for Friday. It's a weekly chart. This is my recommendation. The way I'm looking at this, I think there's a potential double top between 111 and 111.62. I believe we're within 2 days, maybe 3 days of some kind of a 5 to 7 session. It could be a 5 to 9 session pullback in the market. That's if everything concurs with what I'm looking at, and if the volatility index goes from the 12s area into the 14.5 to 15.5 area and then moves higher. But those are all the ifs. I don't want any ifs here. I'm saying to you that I would consider, and you'd go into the TZA. Is that what you would do, or would you short the IWM?
I use options.
Oh, you use options. If you're going to use options and you'd go into, say, December?
That's right.
Or no, yeah, December. If you're going to use options, I would say to you, right in this area of 110 to about 111, I would start one position of the put side. You're looking at the put side, right?
Sure, yep.
I'd be looking at the put side. Why would I start just one position? Because it needs to close under 109.30. 109.67 is the 9-period moving average. If it closes under 109.30, especially under 109 in the next 2 days and 3 days, then the pattern becomes very negative technically in the daily chart, stochastic and MACD, and that should drag down the weekly chart. So far, the weekly chart is not great but good. So I would only start a position, and then I would add to it on a close below, let's call it 109.40 to 109. But I would not do anything other than that. Why? Because there is the chance it could pop up about a point. A point for your options in going out December will probably take away maybe 15%, probably, maybe a little bit more, right? Something like that. But in the meantime, that's the way I would plan it, and it's only a preparation. Or you could just wait and say, why waste money? Let it break under 110 or 109.80, and then I could start the position, because you'd like a confirmation. Now, I have, as I say, in the 120-minute chart, hey, the bar's not finished and the day is young, I always say. The pattern has changed from cup formation to arch formation to possible cup formation. So that's why I'm saying, and in the stochastic's 93%, MACD's good. So it's only a little starter position. And definitely if there's a gap down opening tomorrow or something like that, maybe that does something. But we need bad news to accompany a sustained move down. The sell signal starts, the sell signal in the Dow would start on a close below, say, 15,710. But a sell mode, I'd have to wait for quite a few more 100 points down before I got the sell mode. So I hope that helps you.
Thanks for your time, Basil. It does. Thank you.
Thank you so much for calling. Folks, stay tuned for Larry Pesavento. Should be a great show with Larry. We'll talk about the VIX and many other things tomorrow morning. Have a great day.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.